A great return to trading signals. We've reintroduced trading signals. This week we posted 5, 3 of which were profitable. One was break even and another one was a losing trade. So a great strike rate, great returns. We were trading things like gold, US30, we were trading GBP, Japanese yen. We use a lot of pending orders, sell limits, buy limits, so you guys can optimize these trades without being so glued to your phone, waiting for that notification. Now we're going to dig into the watch list video for the week commencing the 17th of March, 2025. As always, check out the description below if you want to get sight of the trades that we take. If you want to get sight of our free groups, our socials, check out the description below for our recommendations as well. Leave a comment down below. Let us know if you want us to look at any other pairs, crypto, US stock indices, anything that takes your fancy. Hope you enjoy the video, hope you take some value, and we will see you on the next part of this video. Very good evening. Welcome to our weekly watch list video for the week commencing the 17th of March 2025. Last week was really good. We've brought back signals. Okay, you can copy our trades. You know, we're going to provide entries, stop losses, take profits. These are the trades that we take, and you'll see these. We'll provide reports and bits and pieces. We had 3 profitable trades, 1 losing trade and 1 break-even trade last week. So a really good, really successful week. The trades that we made were exceeding the losses we were looking to kind of put on. So for example, if we were risking £1, we weren't just gaining £1, we were gaining in excess of £1. Okay, risk to reward measures are really important. We're going to start off with the dollar index, and apologies, I've got some bits and pieces here from a previous course video that I'm recording, talking about futures, CFDs and the like 2.0. So if anyone's interested, then do keep your eyes peeled. We have the dollar index and we don't really have anything of any significance at the moment. We're looking for a bit of a pullback from this move, but we may see, you know, price trade closer to this 100 price, right? So 100 all the way down here. You know, it's quite interesting at the moment. Crypto is selling off quite aggressively. Obviously all the Trump or tariffs Trump's imposing and bits and pieces are causing a stir to the market. Welcome back, Trump. It's like, you know, the previous 4 years all over again. You know, backdating when he was in power, the biggest market mover independently, obviously him, Elon Musk. You know, there's some wild things going on, headlines moving markets significantly, and it's great for traders that can manage their money, manage their capital, you know, because you're seeing moves like this unfold. Stock indices are really selling off, you know, US30, US 100, crypto markets really selling off. And with such headlines and, you know, things being imposed and, you know, geopolitical tensions comes great market volatility. It breaks things up. You know, we see big trends, we see big moves, and we can capitalize on these as traders. We posted some really good trades last week, covering NASDAQ, covering gold, GJ as well. And we're going to be looking to kind of reciprocate those again this week. Now, again, we're just kind of demonstrating, you know, painting the picture, so to speak, of previous trades, examples, and so on and so forth. And you can see how now we're on the 4 hour, but we're trading between these zones. So the next outlook for US30 is probably going to be something similar to this. You know, if we can capitalize on this, let's see how things unfold early Monday, Tuesday. We don't want to jump in. We might have big market gaps. But ideally, we want to be trying to enter from the zones that we've indicated. You can see here how it's kind of trending nicely into this zone break. We want to be using, you know, significant zones, trying to stack it as close to 42, trying to stack it as close as 43, 44 as possible. Again, whole numbers, psychological numbers. But again, we're trying to, you know, see if we can see something. It looks like a bit of a break in trend here on the hourly. You can see here we sell off, we pull back, we sell off, we pull back, we sell off, we pull back. Now we're looking to possibly breach it a bit. We're right on the brink. So I'd argue, yeah, there could be an opportunity here to short, but we're right on the brink of a reversal. And again here with, you know, NASDAQ, you know, we're just trying to highlight things here on NASDAQ. We're right on the brink of a reversal, but until it goes higher, we're still valid. So until it goes higher and breaks this price, you know, and breaches this resistance, we've got our stops effectively here. Let's say we enter as close to, just put it on the number, stops to cover, like so, this wick, bit of breathing space, you know, that could be the next opportunity. And we'll be looking to trade down to this zone. We're trending to the downside. It's inevitable, you know, it's very evident. You know, can we see sell off, we're pulling back, we're selling off, we're pulling back, we're selling off, we're pulling back. You know, we're at a bit of a left to right movement here, a bit of consolidation effectively. And last week from Monday through till Friday, that was the consensus. So a breakout is imminent, hopefully this week. And effectively what we're looking for is something to break this structure out. And hopefully it signals a sell from here, pull back, and then we can start looking to trade as low as 18,300, the next zone in question. And arguably what we would now have is more zones here. So this is evidently a zone. Again, we try and use the close and the open, the lowest point of this consolidation range. And I'd arguably put another one here. Whilst it doesn't tie up with whole numbers and stuff, it's still, an obvious area that we can look to, trade from. So we can get rid of this zone here and we can use that to play from. Gold. So again, gold signals. We posted gold signals last week. We made some really good money. We scaled in really nicely. $3,000 an ounce. We've been talking about this for a long time and we were trying to catch the buys. We couldn't catch the buys because we didn't pull back. Once we broke 29.25, we were selling from here last week, if you remember. Not the week just gone, the week before. Start of March, we were selling this structure here, and it played out really, really nicely a few times. And then eventually what happened is we broke. And then what do? We tried to flip. We tried to catch the break and retest. So we break the structure that we were selling from, and we were trying to literally capitalize on a bit of a pullback here. And then we were trying to ride it up to $3,000 an ounce. Why 3,000? Psychological price. We're setting all-time highs. We're in all-time high territory now. And again, once we set these all-time highs, there's never a cap on how far we can go. We just have to use some sort of logical price, $3,000. Once we hit that, people are going to be taking profit. Once we hit a huge, significant milestone on a massively traded commodity, people are going to think, it's going to stop there. Let's take some money. And that's what then causes the imbalance of price to pull back down again. And that's what we're starting to see. And you can see this daily candle here, quite bearish with the wick upside. So the next step for gold would be possibly something like this. And we didn't quite see it towards the end of last week. Market volume dropped and so on and so forth. It would be great to see this. It'd be great to see something like this before we see the next wave up. So again, inevitably with the risk and with all the headlines that we're seeing and all that kind of jazz, we'd expect hopefully a correction so that we can get entries back in line with buyers. GJ, again, we were talking about this. We've taken some good setups over the last couple of weeks, from support 190, from resistance 193, and we're literally looking to do the same. So again, 193 alert set, and we've got 190 alert set for our buys. UJ, EJ, we don't trade them. We just kind of merely follow along with, the other kind of yen pairs to give us a bit of market correlation, a bit of understanding of what could be worth trading. For example, if EJ or UJ move before, GJ could be maybe slightly delayed. We could look at GJ and try and capitalize on a position. GBPUSD, obviously this 130, we didn't catch the opportunity last week. We're waiting patiently. We've got our alert set again here, 130, 130, 100 I think it is, or 130.89, let's set it for 100 in fact. And that's our sell zone, right? We want to enter as close to that middle as possible, 100 as possible. And again, we'll be looking for maybe, here we've already got 130 sell zone, D1 previous supply, D1 previous resistance, weekly key level being covered by the stop loss, and then again a potential for lower time frame structure break, something like this, and again potential price action confirmation. So again, if we look at the daily, we've got our stop loss here covering this entrance, and possibly, arguably this to a degree. And again, we've got 130 here. We've got obviously supply. We've got some, previous tests. It makes sense. It's a big number. 130 is a big psychological number. The zones are the prices we like to trade. And again, Euro USD and Aussie USD instruments and pairs that we like to follow along with. Again, using more so in correlation to make sure we can try and capitalize on GU and GJ. We are UK based. We trade the Euro, the London session. We also trade the stock market session, the US stock market session at 2:30. Now, we obviously want to trade where we see volume. GBP Japanese yen moves good during the Euro London session, but also the Eastern, same as US stock indices. It moves a bit during the Euro London, but it really takes off during the stock market open at 2:30. So again, instruments where there's opportunity every day, rather than, for example, Aussie USD in the market morning, GBP Euro market open, and again, similar to other instruments that don't really move too much from Aussie Japanese yen or New Zealand dollar Japanese yen. We're never going to get an opportunity to trade those with good volume during the sessions that we trade. So Bitcoin, again, Bitcoin, Ethereum really, really selling off. So again, whilst these charts don't look too attractive, apologies, we've got scribbles on from where we were kind of annotating during the week. We can start to see now, we're trending, we're selling off, we're breaking significant prices. $2,000 on Ethereum has been broken. And we also have Bitcoin, which we really want to see trade south of 70k again. We were obviously looking for a continuation once we got the break here. We pulled back. We're still happy with how things are unfolding. You can definitely see that this is a bit more choppy than what we would like. So up and down, up and down, up and down. Dangerous. But, the consensus is hopefully we can sell off a bit more, maybe even break 72k, and we can really load up on our portfolios, which would be really, really good. But, 72k would be, certainly the target, because obviously we've had a bit of a sticking point here, resistance, and then we explode for 1, 2, 3 weeks, trading all the way down from the bottom here, all the way up about $30,000. So significant, very, very significant. So I think I'll wrap it up there. If anyone's interested in learning more, if anyone would like to get our entries, hit the subscribe button, join our free Telegram group, check the description down below for products recommendations and access to various different bits and pieces as well. And we'll see you on the next one. Have a blessed trading week ahead, and we'll hopefully see some new members this week.